How do cross-border bank payments really work? Imagine sending money to a friend in another country or paying for something overseas. Ever wonder what actually happens behind the scenes? Well, cross-border bank payments are more than just a simple wire transfer. They involve a series of steps that make sure your money gets where it needs to go safely and accurately. When you open a checking account at your bank or credit union, you might not think about how your money travels across borders, but it's a complex process. First, you start by giving your bank instructions to send a specific amount to the recipient's bank account in another country. You usually need to provide details like the recipient's name, account number, bank name, and the amount you want to send. If you are sending money in a different currency than your own, your bank will convert the funds into the recipient's currency. This is called currency conversion, and it uses an exchange rate set by the bank or payment provider. They may charge a fee for this service, which can vary depending on the amount and currencies involved. Once the funds are ready, your bank doesn't usually send the money directly to the recipient's bank. Instead, it routes the payment through one or more intermediary banks that have accounts with each other across borders. These banks act as messengers, passing the money along the chain until it reaches the recipient's bank. To do this securely, banks often use a network called the Society for Worldwide Interbank Financial Telecommunication, or SWIFT. SWIFT is like a secure messaging system that ensures payment instructions are sent safely between banks worldwide. During this process, banks also perform checks to make sure the transaction complies with international rules. They verify identities to prevent money laundering and fraud, following regulations called Know Your Customer and Anti-Money Laundering rules. Once the funds arrive at the recipient's bank, it may perform another currency conversion if needed. Then, the bank credits the money to the recipient's checking account or other deposit account. At this point, the payment is complete, and the recipient can access the funds. Both the senders and recipients' banks usually send confirmation notices to let each other know the transfer was successful. They also reconcile their accounts to keep records accurate. Managing cross-border payments requires banks to have advanced systems to handle different currencies, follow international rules, and coordinate with foreign banks. This process can sometimes take a few days and may involve fees, but banks work hard to make it as smooth as possible. Some banks are now partnering with financial technology companies and local payment networks to speed things up. For example, using local systems like the Automated Clearinghouse in the United States can help settle payments faster. To sum it up, cross-border bank payments are a series of steps involving payment instructions, currency exchange, intermediary banks, compliance checks, and final settlement. Banks and credit unions play a key role in making sure your international transactions are safe, quick, and reliable.